Welcome, everybody, to the Deep Web3 Secrets podcast. We are joined today by Addicted to talk about Bitcoin and the history of Bitcoin, but mostly the modern history where it becomes overtaken by banks and governments and the same old people that maybe we were trying to get rid of. Addicted, how you doing today?
Doing great. How are you?
Well, I am fresh and alive. I mean, these markets are keeping me on my toes. I've almost retreated back to my cave for hibernation, but I have been noticing in the news and stuff maybe a new conflict. I shouldn't say the news, I should say Twitter. I've been noticing on my Twitter feed that maybe a new conflict is brewing between Bitcoiners, which is the Bitcoiners or the people that say that Bitcoin is being overrun, and the people maybe that support that, and maybe the people that say that doesn't matter. Maybe that's three groups. Anyways, what do you think about the strategic Bitcoin reserve?
Just for now, it's nothing. It's just like, oh, we're not going to sell confiscated Bitcoin from criminals or whatever.
It's
But
literally nothing, right? It's the same
yeah,
thing except that they put a piece of paper that said they would literally do nothing.
yeah, yeah. It's just a way to do nothing and then act like you're doing something. It's very perfectly political.
It is, in fact, ironically political now that I think about it. It is nothing burger in political wrapping. So it's like a double layer of nothing, doing nothing, and making big fanfare out of it. Okay, so one other thing that came up was the supposed kiss the ring moments with all these other founders, just to announce that they would not be buying alts in any circumstances. While there was a tax neutral case possibly to buy Bitcoin in the future. Do you think this was a slam on alts, or what do you think?
No, I just think that they're playing their little game. Like, imagine the government saying, oh, we're going to do a budget neutral thing. The government has never done a budget neutral thing. So if they're saying they're doing one now, as it relates to crypto, that just means they're doing nothing. Like again, it's just a nothing.
That was my read of it too. So like they could basically they would not be buying it, but there's this esoteric case where 51 senators could buy it. But yeah, it's basically nothing. That's a law that they'll call ancient by the time they ever use it. Like they're citing an ancient Bitcoin Strategic Reserve Act. Like I'm not sure what this means for the government. I think it is nothing. But what does it mean for the continued accumulation into private hands, maybe through the ETF?
Uh, the ETFs are pretty weird, I would say. Um, there's just so much to discuss there. Do you have a focus?
My focus, of course, I've tried to get to whether Bitcoin is still good. Can it survive what's happening? And I've read some things recently by some authors, maybe including yourself, that seem to indicate that everything that's happened is expected behavior. But I'm noticing this new Hegelian divide between and maybe against Bitcoin maximalists, that now Bitcoin is the tool of enslavement, or however you want to say it.
Yeah. Yeah, I mean, it's easy to see how you get there because the people who you hate, the people who you don't want involved in the grassroots movement are now like, oh, we're gonna capitulate, we're gonna buy Bitcoin now. And now all the people who are like, oh, I liked Bitcoin before it was cool, are coming out and being like, this is the worst, this is a terrible thing. But Bitcoin is permissionless, so this was always supposed to happen. It was supposed to be adopted by everyone. That's what we were going for in the entire time. That's what we were going for.
This is what everyone looks like. Yeah, I mean, there's whales and there's minnows in real life, IRL. And so perhaps what seemed to be part of the edge case of crypto, small distribution wallets, which were really skewed, um, coins with few big holders. Isn't that an actual model of the actual literal economy right now?
Um, the economy is really struggling right now, and I don't know really what's going on. It kind of feels like one of those the whole trade war that's happening, they're going for like a controlled demolition type of situation where there's like a purposeful recession into a liquidity event. Just kind of like what happened with COVID and the housing crisis. That's kind of what I'm bracing myself for is um, something breaks in the economy and then the Fed has to print a bunch of money to get us out of it.
Okay, I love this. This kind of fits with my mental model, but just to tie people back historically, we're talking about Trump's now classic V shaped recovery, right?
Has he been saying that? I don't really pay attention to Trump. He's such a clown.
Yeah, I haven't heard anyone say it in the modern day today, but I remember 8 years ago, or seven maybe, because it was a little bit further into Trump's administration. But I remember them talking. Was it going to be a K-shaped recovery? Is it going to be a V? And Trump was like, "It's all about the V. It's going to be a V. It's going to go up higher. You're never going to believe how high it's ever gone." And that's what happened. So, but I think if you look at the charts now, it's very obvious that there was this COVID dip that hardly lasted long enough to put any space between the bars of the graph, and it shot right back up because they introduced a liquidity event, right? Isn't that what happened? Is that what you were referring
Yeah,
to?
just money printing and, basically lowering interest rates to 0% so anyone can take out tons of debt and inject it into the economy.
I brought up this classic GIF of Jay Powell at the money printer, and a lot of these GIFs were at a different time. We're not in that money printer time now. Money printer go brrrr. Yeah, and so this was part of the cultural phenomenon, but I wonder, if everybody's expecting money printer to go burr, is there any case where it don't go burr?
Yeah, if they want the entire global economy to completely collapse, which some people say that it could happen and that somebody wants that, but I don't believe it. I think that everyone loses in that situation. I think it's much safer to just print money and do controlled demolitions and then print money to get out of it. Position yourself as close as you can to the spigot of the money printing, and then you'll make the most money. If you have your hands on all the levers, why would you just let the entire system blow up? Then you don't have any power. There would have to be basically a big plan. People say that CBDCs are that plan, but I don't believe that.
Okay, I gotta jump in because you'll just keep going, man. So many good things to comment on there. So I do. I mean, still you're fitting in to my mental model. But of course, we have to touch on they if we're going to talk about whatever it is we're talking about. Bitcoin getting integrated into whatever system currently exists. I believe, first of all, that there is no singular they. There are multiple groups of infighting elites. I mean, would that fit with your mental model?
Yeah, I mean, there's thousands of billionaires out there. Um, they don't work together. They're all greedy. Like they're all ironically scarcity based mindset, all these billionaires. Like it's impossible to get $1 billion without like being greedy and kind of like leeching from other people and never having enough. So like
Yeah.
a lot of people like to oversimplify it and be like, oh, it's just this one entity that's in charge of everything, or like it's Satan or whatever. Like religiously, it's Satan in control of everything. But that's not how it works. The reason why it's so complicated is because there's a million different things going on and nobody knows what's going on. It's just a total cluster.
I do think that you're definitely onto something. So my base case is the elites in fight. So whatever levers there are, they are happy that to get closer and closer and closer, and if they could put their hands on it themselves and stab another guy in the back, they're going to do that. And so we see now. I'll just touch on geopolitics. We see a retreat towards mercantilism. Europe appears to be the loser. It appears that the rich people in China, Russia, and the United States have decided that the old blue blood rich people in Europe are going to take a bath this time. And maybe they don't get a world war that, props them up again. But in the same case, I do believe a lot of the theater that's happening now is to get us all to fall in line behind what's essentially the same old elites, just a minor reshuffling of the house of cards. But can we tie this back into Bitcoin? When BlackRock, who is a tool of somebody, maybe more than one, right, because they're shareholders, so even the shareholders don't have to agree with each other, is a tool of this old world, and now it's earning money on volatility, right? It's earning the 2 and 20 on the volatility spreads. It's kind of holds the Bitcoin, I guess, but it's just getting its exposure, right? Is this anything more than expected behavior, or what can we do now that, just like gold, they can manipulate the Bitcoin price, or will continuously be better at manipulating the Bitcoin price moving forward?
Well, a lot of people are trying to say that because number hasn't gone up enough, that BlackRock isn't actually buying real Bitcoin. Like, oh, number is still below 100K, so um, you know, like Coinbase isn't actually buying Bitcoin on their behalf. Like this is all paper Bitcoin. So if that's true, which I don't think it is, that would mean that it would be harder to manipulate Bitcoin if you don't actually own any. You know what I mean?
Yeah, well, absolutely. So in the case that they're lying, they won't be able to manipulate. But yeah, I mean, exactly. But so we have a stock to flow model, and I was assuming if they're making their money by the exposure, you're right, the friction, and it's a stock to flow model. Uh, but they used to have zero, and so they must have some stock, just like gold, right? And I don't know if, like gold, it's rehypothecated yet because it's so new. It might be purer than gold, as long as they do hold it. So if we moving forward, we're going to have to assume they hold it, because in the case they don't hold it, LOL, they're going to lose. And I guess we'll notice that pretty clearly, right, in the future. But in the case they are holding the Bitcoin, because I think that'd be the responsible thing for them to do, since they make so much money on the friction anyway, they're going to, just like silver and gold and other markets, nickel, they're going to continuously learn how to manipulate these markets better, even if number go up. They're going to shake out as many people as they can. These are the original sharks, right?
What do you mean by they make money on the friction? Can you elaborate on that a little bit?
I think I understand that an ETF makes money when people buy, and makes money when people sell. So when people buy and
Nope,
sell.
nope. That is wrong. That is
Oh my
100% wrong.
gosh, teach me, sensei.
So I did a post on this a while back. It blew my mind when somebody told me. I was like, "Is that real? Like that's how that works?" Yeah. So they don't make any money on volume or volatility. They are taking like a 1% fee per year, like a 0.5% fee per year. So just every like no matter what, they're just taking their cut, and that's it. Um,
Okay, and I'm gonna get I get a comment from Solo Miner in the chat right here. Depends on the ETF. So of course it depends on the ETF.
I don't think it does. Every ETF I've looked up, they don't have a trading fee.
Right. It says
Um,
some more than others. So that means that X% trading fee is going to be different. But that's probably why each ETF needs to be approved. It's its own vehicle, right?
um, I mean, I feel like a lot of them copied BlackRock because they knew that BlackRock was going to be approved because it's BlackRock. Um, and there are small changes that go into play. Like now they're talking about in-kind um, custodianship, where the liquidity providers are allowed to trade Bitcoin directly instead of the cash creates kind of model, which is a small distinction, but I don't know. It takes some research to kind of like wrap your head around it. It's like very boring, tedious financial stuff, and yeah, I don't know if you want to get into the weeds on that.
I guess what we should do is definitely dump a link to your blog in the chat just so anybody watching this can go and I know you dive
Right.
deep. You're a deep diver. So it's not like
Try.
any one of your posts will explain the whole thing, but if any particular topic we touch on, they can always use the backlinker to find your post because you've written a lot of posts, right? I mean, how long have you been blogging about financial markets?
I mean, I've been on Hive since 2017. I was doing a lot of conspiracy theory in the beginning, but I kind of moved away from that a little bit.
I think the
Like
financial
global,
game is a better conspiracy theory to spend time on because if you're right, there's money in it.
yeah. Let's see.
Well, while you look at that, I'll just say if I'm right about Bigfoot, there's no money in it. Doesn't matter if I'm right. You know what I mean? Like, so at a certain point, it's a distraction where if I'm right about what'll happen in April or October, there could be real money in that for me, you know? And so it's a much more productive use of my time, I find. And over the years, I have tended to publish more technical analysis, even when I have, you know, like the farm. So I do a lot of permaculture stuff and, you know, planting. But there's this tendency to write about what's making you money. And so, you know, maybe we do a little bit more about that. So, like, okay, you started writing 7 years ago, but when did you, you know, maybe get into your niche about analyzing markets, economics, and all the other geopolitics, that sort of stuff? I mean, I can see the transition from conspiracy theory, but you know, tell me when you decide. Have you settled on a brand at this point, and at what part of the process did it come about?
No, I mean, I wouldn't say that. I could still pivot to whatever I want, really. My blog reads more like a diary than a actual serious kind of thing, you know? Sometimes I'll go to global politics and then, it's very ADHD. I'll go to a conspiracy and then finance and then gaming. I just kind of bounce around to whatever catches my attention that day.
Fantastic. Yeah, and so I notice, especially on the social media on X, you've been really hammering these short-term ups and downs. And one of the things that really attracted me to you was your unabashed use of the moon cycles, full moon, new moon, blood moon. And so I don't know if
Those are
you
fun.
just yeah, I don't know if you just want to like why is Crystal Girl right about the moon cycles? Like could you just talk a little bit about that?
Well, like with gambling, you only have to be right if you have a 10% edge, like if you're right 60% of the time and you lose 40% of the time, you can still lose 40% of the time and you'll make a ton of money. So like the astrology and the patterns that are from astrology, they seem to be right like a tiny bit more than 50%. So if you can start cross-referencing them to other forms of technical analysis, I've found that it's a you might call it like an echo chamber, but I don't know. I feel like it's a way to reinforce your strategy. My main strategy is 4-year cycle because I feel like that's the strongest thing. But I started the astrology thing as a joke, and I just kind of kept going with it because it was actually doing kind of well compared to normal technical analysis.
And I'm glad you say cross-referencing because recently I was thinking the full moon would mean it would pump, but you indicated that you thought it would mean it would dump. And upon further analysis, what analysis? I think you're right. I think there's a 60-70% chance that we break downward here, and a very low or relatively low percent chance that we're going to break up. Just on the other indicators. So it's not like it's a magical formula for up or down. It's more like another thing to figure out breaking points, breaking days that big moves happen, something like that.
Yeah, yeah. Like when I first saw the moon cycle trading thing, it was like, okay, the full moon to the new moon is usually bullish, and then the new moon to the full moon is bearish. That's like the basic trade. But um, when things don't happen your way, sometimes it's just delayed. So like if you were expecting a pump somewhere and it didn't come, you might be like, oh, maybe it's just late, and then you can like bet on it. I've done that a couple times, and it's worked out surprisingly often, and I'm like, wow, that's so weird. Like, so if it doesn't do what you want, a lot of the times you can just expect it to do what you want a little bit later. Um, but I mean, I'm not like an accomplished trader or anything. I just do it for fun. Uh, I would say I probably gamble with like 1% of my bag, so like it's not a big deal.
That's a that's a great point I want to touch on because of course this is none of this is financial advice because the laws exist, but when they say don't sell your
Laws?
coins, don't keep them on the exchange, don't ever, and I agree, I don't like the natural association with day trading to holding because I'm a holder. But to expose a small percentage of your portfolio to test and check financial hypotheses is smart. And I think I've learned more doing that in a responsible way while avoiding the, you know, overexposure. So, yeah, if you just want to talk a little bit about that, you're playing on the margin, right?
Yeah, and also, you said not financial advice or whatever. Uh, that's it's totally legal to give financial advice. You just can't get paid for it. And if the thing that you're talking about isn't a security, you could probably get away with a lot. So if you tell someone to buy gold, and even if you get paid for it, and then their entire portfolio gets wiped out because of what you said, you're probably not going to get sued. It's the Securities Exchange Commission that usually sues people for these things, like not declaring. Um, it's basically about getting paid. Like when people get paid by like a shit coin to shill it on Twitter, and then the number goes up because they were like manipulating it with public support. The person who got paid, they have to declare it to the Securities Exchange Commission. That's like why Shaq got and all those basically um, all those
Bas-
famous people got
basketball
sued.
players, yeah, right.
Yeah, Shaq went off the grid for like 6 months. He was like avoiding the lawyers. It was amazing. Like, did you catch that?
I didn't notice it was Shaq, but I noticed that Tom Brady went real quiet after FTX for a bit.
Yeah. So Shaq was like they couldn't find him. He was like avoiding the lawyers that were trying to serve him legal papers, and they ended up throwing like a legal file at him at like his moving car or something like that. It was crazy. And then he was all confused, like, oh, I don't understand this. Like I don't understand because those guys are used to being able to like advertise stuff like shoes, like stuff like that, stuff that isn't a security. But then when they started shilling
Right.
securities, they got into a whole bunch of trouble. So basically, you can give financial advice, you just can't get paid for it. Like that's the main thing. So if you say not financial advice, that doesn't mean anything. If you got paid to say the thing that you said, you can be sued. It doesn't matter if you say not financial advice.
I always thought that was a bunch of baloney because obviously, I write very much like you mentioned, kind of more of a diary type style. And all I'm saying is that, hey, look at what I did or look at what I learned, and so I have never forced it into my publications, but I've joked about it a number of times. But I didn't really understand that. So that's good to know. That's really good to know because
It,
I feel like I'm honest. I'm an honest guy. I just show you. I'm not telling you to do what I did. I'm saying, look what I learned, right?
yeah. One thing to note on that is, who didn't get sued, who did everything right, was Matt Damon. You remember Matt Damon on Crypto.com and all that stuff, like fortune
Yes.
favors the bold? People were calling out for his blood. They were like, they wanted him to go down so bad for what he did, but he didn't because he reported everything. He did it. He did it by the book. He had a lawyer. Like he knew what he was doing.
So the esoteric bureaucracy prevailed. He did the thing. He paid the guy, and he paid the we call it a bakuna. What is that? The protection money, and he could say that fortune favors the bold, which I agree with. I'd never used the site he was shilling, but I think that the idea that people would learn about these technologies is a good thing in my mind. I wonder how much of the old system of Bernays advertising makes it so that onboarding the masses is like automatically done in the scammiest way possible. I mean, recently CoffeeZilla has done these great exposés on the gambling situation in CSGO, underage gambling addiction and all this stuff. Mafias based on these legal things. And this has nothing to do with crypto. Like we are inheriting a world of problems, and we may even provide some solutions in some cases. So, what do you think about Bitcoin moving forward? We haven't talked about 51% attack, but maybe we could get there at the end. I want to know, how do you feel about Bitcoin and just in general distributed ledger technology influencing the social conversation moving forward?
Well, when I first got into crypto in 2017, I was not super interested in Bitcoin. Um, because I was like, I was like everyone else. I was like, no, what's the next Bitcoin? What's the next 100x? Like, I want to get those huge gains that the Bitcoiners got in the previous cycle. Um, but as time has gone on, I've just been more and more bullish on Bitcoin. I'm like, it's the more I learn about it, the more I'm like, this is much better than I thought it was. And at the years go by, and it's like it's outperforming everything. It's outperforming every asset, like financially in the world. It's got a better risk reward ratio than any asset in the world. Um, and I just think it's kind of ignorant to be bearish on it or to say, oh, it's old technology. Something else is gonna take it out. Like it doesn't have to be number one on the market cap. Like if it gets flipped, it's still Bitcoin. It still does what it does. Like it doesn't. It's not a competition in my mind. Um, uh, I believe that cryptocurrency is a collaborative ecosystem, and I believe that Bitcoin takes the fewest risks possible for what it does, which makes it the most secure asset possible. So, like, Bitcoin is an amazing backbone for the entire industry, but it's only a backbone. Like, you're not gonna. I used to compare it to an anchor on a ship. Like, you're not gonna put someone on a ship and be like, "Ooh, look at this cool anchor." Like, no one cares about the anchor. It's like there's so many other things on the ship that are cool, but like we just haven't gotten there yet, and there's so many failures that we have to like figure it out.
Well, as someone who participates in iterative and modular development for a lot of years now, I love that attitude. And I actually have a similar story. I got in and was constantly looking for new stuff, because I'm a builder and I wanted to check out new stuff. And I slowly went backwards, and started to value the stuff that survived cycles, and as Bitcoin continued to perform, I continued to learn more about its viability. But I think part of that volatility will eventually fade. And so I know we've touched on this in the past. I just want to rehash here for the recording. One of the things that a lot of people talk about is the 4-year halvening cycle and its effect on the block size, the block reward distribution to miners. But as we know, that effect is becoming reduced, and more frequently transaction fees are the bigger percentage of the reward to miners. So while I do think we may have another halving in us, these halvings are having half as much effect every time. And so where do you see, when will the doubling curve, or when will a more stable linear progression take hold, do you think?
I wrote a post on this, like, I don't know, a while back. But I'm not convinced that the halvening cycle is getting weaker at all, because the amount of USD, which is how we measure the value of Bitcoin, the amount of USD being cut in half every year is exponentially higher than the 4 years before it, because Bitcoin more than doubles every 4 years. So, it might be half as much Bitcoin, but it's like 10 times as much fiat.
You just blew my mind. You just blew my mind and my whole theory out of the water. Could you keep talking for 60 seconds out of respect for my mind being blown?
Yeah, I don't know. Let's see. No, it's just,
Oh
like,
my
what
gosh.
matters more? What matters more, the dollars that we're measuring it in, or the Bitcoin? Like, because, and I still think that, the trading fees are, they're getting up there. The trading fees for Bitcoin are getting pretty high, and it's almost able to sustain itself now by itself. So it's called a subsidy for a reason. It's supposed to go away eventually, and Bitcoin still has another 100 years of subsidy. So I think it's doing just fine.
Well, I absolutely think you're right. I think that's how electricity calculations are done. I think that's how all of the operating costs are calculated, and you're absolutely right. It, under these conditions, will continue to matter. What
I
about
actually
what? Yeah, go ahead. Go ahead.
I actually thought that the halving event was a stupid idea at first, but then Dogecoin doesn't have one. And so Dogecoin is very important to me because we get to see what happens when a POW chain has a linear type of inflation rate. And what I've, which I think is super ironic, because that means Doge per capita has a higher security rating than like Bitcoin for like 51% attacks and stuff. Um, but what I concluded was that without the halving event, you're just throwing away money. Like, you're throwing away money and you're wasting energy. There's no reason to do it. You just don't need to put that much money into security and mining. It's just a waste.
Yeah, fantastic addition there, and I do like Doge. I think they've been very creative and as being a part of the Litecoin system, and Litecoin itself being an adaptable and testable fork of Bitcoin, you might say, tried and true in what it is. Maybe the silver that you can use to move your coins between exchanges, to Bitcoin's gold, digital gold. And so I guess when we talk about proof of work, I think you're right. I think the halvening over not a halvening, we can see in real time that is valuable, and we can see the same in Doge price. It does go up, but it doesn't seem to be doubling. And so we have some comments here about tips, and I want to maybe touch on the Lightning Network and of course, on an exchange as well, any sort of centralized system could do it. But I happen to started participating with a Lightning Network channel. It's called V for V, Value for Value, and I've been learning more about the Lightning Network and trying to integrate that layer 2 Bitcoin into other things that are of interest to me. And so I wonder if you think that the Lightning Network is a viable solution, or at least shows that there could be viable solutions to layer 2 on Bitcoin. What do you think about that?
Well, I actually studied the Lightning Network and wrote a post on it for the first time last year. And last year was also the first time I ever learned about UTXOs. So like I'm still learning about Bitcoin. I think that the Lightning Network's function and value is extremely niche, and that a lot of Bitcoiners think that it can do everything and that it can scale up, but it can't. It's not how it works. So, but it is very good at what it does, which is hard to explain in a short amount of time. So I don't think I'm going to try. But it's basically peer-to-peer. It's like you open a channel with a peer. And if you try to move money around, like if you try to jump 10 different channels, you have to hold collateral 10 times for that money that's moving around. So it's not scalable, because if you do too many node jumps, uh, the collateral required to allow that money to move around gets exponentially higher. And that's why none of the exchanges are really using Lightning Network and letting people um, withdraw from the exchange with it, because it's very it costs a lot of collateral to do it.
Well, brilliant. I don't think I've ever heard Lightning Network summarized so succinctly. An interesting niche use case. Yeah. So, okay. So, and moving forward, I mean, I haven't heard anything about these ordinals guys in a long time. Is that still a thing? And why has the mempool cleared if ordinals are still a thing?
Well, that was a flash in the pan, like a lot of things, like, just worthless shit coins being invented, people speculating on them hard, and then all the money drying up and going away, and then the mempool clears up, which I'm very happy about. I don't think we should be polluting. Like, I'm very maximalist in the idea that I don't think we should be polluting the most secure chain with garbage. Like, a lot of people have tried to make the case that Bitcoin needs to increase its block size, and I do think that that will happen. Like, all the Bitcoiners disagree with me. They all think that I'm crazy and that I don't know what I'm talking about and that I'm ignorant. But I'm like, you guys are gonna increase the block size eventually. You just don't need to do it now, because we've already seen what happens when you increase the block size and you don't need it. Um, a bunch of garbage gets thrown on there, and then every node operator has to save that garbage on their node until the end of time. So they don't need to raise the block size until, I would say, I think that Bitcoin transactions are going to get up to like $50 a pop again, and then we're going to have this discussion about making the block size bigger.
I just love how frank and open you are about this stuff. So that's very interesting. And until the end of time, of course, is a phrase that rang with particular weight, because I, for one, do believe that future anthropologists will be analyzing things like blockchains to see what the heck we were doing. Um, so, yeah, it was an experiment. They showed that it could be done. I maybe didn't agree that we needed to stop them by force, but just by letting them burn themselves out, it does seem that there isn't actually that much desire to own a Bitcoin NFT.
Yeah, that is a really good point. Um, a lot of Bitcoiners were so mad about ordinals that they were saying maybe we should censor our own chain, and I was like, you are the danger now. Like, you are the problem if you think that you need to self-censor the chain and get the ordinals off of there. It's like, no. Like, you don't just sacrifice your values because some shitcoiner came on and made a token and now you're mad about it. You're a permissionless ecosystem. You deal with it. Like, figure out something else.
Deal with it. I need an assistant to this show to put these gifs in the chat when the relevant gifs. Deal with it. That could be one of the greatest lessons that we've all had to learn, because there are things that exist in permissionless ecosystems, protocol level development, that we're not going to like. And it's ironic,
Yeah.
but we don't even have to agree on which are the things we don't like.
Well, and that also ties back to BlackRock and Fidelity and everyone getting involved. It's like, deal with it. Like, this is how it was going to be. It's permissionless. You don't get to decide who gets to participate and who doesn't. Like, this is what we signed up for. Like, you need to stop. I find it really hypocritical when people are like, oh no, we got to do this is bad, and it's like, you want to create the old system that we were trying to get away from, just that you're in charge now. Like, you're a hypocrite. You need to stop.
Well, thank goodness for champions like you, because I think it does give us a view of how these old systems came into play on a slower time scale with a lot more generational creep. That generally people don't maybe know what they want, or their first reactions are not the best things. But knowing when to do something and when not to do something probably is the trickiest thing of all time. I know we were chatting about that before the show. Do you want to say anything about discipline, maybe, or anything relevant to that?
I am struggling with discipline every time I day trade, honestly. But that's not what you're talking about. So I don't know. It's very stressful to be in crypto. Like, you lose 90% of your net worth and you're like, what have I done? What am I going to do? Is it number ever going back up? And I feel like we're kind of in that situation right now. Like, people are really, really worried about the market. And I'm not worried at all. I'm like, this is great. I think there might be some more pain, but not worried about it.
You are the deal with the Doge dog, and I love it. And so, any other comments you wanted to say about maybe the last year or last 18 months of this amazing road we've come down? Those of us who have been through more than one cycle, those of us that have kind of get the shape of the fractal at this point. Any last words for all of us lone champions out there who have come so far?
Well, yeah, if you were to talk to yourself like 12 months, 18 months ago, and you were to say, this is what happened, you'd be pretty stoked, right? So people are caught up in the moment and they're like, oh no, it's down from all-time highs. And it's like, no, we're up. We're up so much right now. We are winning so hard. And like, it's just like a bunch of undisciplined children running around saying the sky is falling a lot of the time on CT. And it's just like, it's annoying, but I'm like getting better at dealing with it. Like, it's gonna get worse before it gets better. Like, as we get into mainstream adoption, the average crypto participant is going to get dumber, because like, we're going to have a flood of new users for like the next 10 years, and they're all going to be totally clueless and have zero experience. And so it's just going to get worse, like, honestly, especially during the bull markets. I'm ready to tell people not to jump in at the top, and I feel like everyone else should do that as well. Like, if we're trading at $500,000 at the end of the year, maybe tell people don't buy crypto.
You are amazing, Addicted, and all I could say is that this has been Deep Web 3 Secrets.